Oh, we're not done yet. Back to work. One more day left. Got Non-Farm Friday coming right around the corner. It is already Thursday evening, guys. We're getting ready for Friday's trading session. I got a lot of great trades setting up for Non-Farm Friday. I'm going to cover all my favorite trades in tonight's video. That way you get a game plan to make some money tomorrow. As always, though, got a lot we're going to cover tonight. Before we jump in and get this party going, though, make sure you subscribe to our channel here on YouTube. That way you don't miss tomorrow night's video upload. And as always, if you guys appreciate this video tonight, hit that like button for me. I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Friday. Friday is not going to trade itself. Where's the beach money? Where's the weekend, the summertime weekend money going to be made here for tomorrow? Seriously, though, where are the best trades setting up for Friday? Well, boy, we get some nice juicy ranges on the S&P and the Nasdaq right now. S&P and Nasdaq, we'd love to get some breakouts going higher with that non-farm payroll number for tomorrow. Maybe some reversals off the high here as well. And I think we're probably going to get maybe a bit of a head fake, maybe a surprise out of that non-farm payrolls tomorrow. So I definitely have some breakouts and some reversals planned on my radar for tomorrow as well. We're bullish on both the Nasdaq and the S&P. The buyers continue to be a bit drunk on this idea of lower rates to the Fed right now. But like I said, we got non-farm payrolls tomorrow, and I wouldn't be surprised if we see a bit of a surprise out of non-farm payrolls, maybe a head fake or a fake out breakout on this. So not to worry, we're going to cover all that here tonight on this video. Oil continues to be bearish here right now. We're at a major area. We're at a major area of support here. So I would love to get a nice big bounce up around that, 89.5 to 90 area. Or, we may keep on trucking going lower here. I get some key levels down around 85 for us for a breakout going lower here. So tough to want to be a buyer on the oil, but I will talk about some long setups if we can get the right situation tomorrow. But for right now, we're shorting those pops here on the oil, and I'm going to cover all my favorite trades for Friday on oil as well. Now, speaking of Friday, let's not forget tomorrow is not your average Friday. Tomorrow, of course, we have the employment number, which is undoubtedly the biggest news of the week. It's the first Friday of every 1 month. Now, I mentioned earlier that we might see a bit of a surprise out of that employment number here tomorrow. Tomorrow will likely be one of those situations, those scenarios where good news is bad news and bad news is good news. What I mean by that is, let's say tomorrow that employment number comes out and surprises everybody with a really low number tomorrow. The markets are probably going to see that as being good for the markets, because that will mean the Fed has done their job effectively at tanking the economy and they won't need to raise rates as much. So bad news on that number tomorrow could really just light these markets on fire, especially the S&P and the Nasdaq. But of course, if the market comes out really good tomorrow, right? If that number comes out much higher than they were expecting, now we have good news is bad news, right? The market may look at this and say, well, boy, if the jobs market's still very strong, the Fed will have no choice but to raise rates at record-breaking levels at 75 basis points, a full 1 percentage point on their next meeting in September. This is really what I think is the biggest kind of variable as we go into tomorrow. Bad news being seen as good news, and I think that will definitely be a theme tomorrow for a possible fake out breakout out of these ranges that we're in right now. And then, of course, we have been watching Fed speakers all week. We saw today that, again, I mentioned earlier, buyers they're kind of drunk on this idea right now that somehow the Fed is done raising rates and, inflation has come down. It was all sparked by that ISM number we saw on Wednesday when those prices paid came down really low, right? So everybody, you could tell today, right, buyers were buying every single dip until we got that deeper pullback that we talked about in last night's video. That was the one everybody was waiting for. The bottom line, though, is we don't have really anybody besides Barkin tomorrow at 8 o'clock Eastern time, but I will be keeping my eyes and ears open for any other Fed speakers as they come in and try to dump some cold water on the idea that inflation is under control. It seems like right now the Fed has a mission of kind of educating us that, hey, inflation's not under control yet, we're not done raising rates yet, and we'll see if that combined with an employment number tomorrow, I'll tell you right now, this could easily be a very very, very busy summertime Friday, and I think a lot of it's going to really hinge on how that number comes out tomorrow morning. Good news is bad news, right? That's the key for tomorrow as far as that employment number goes. And will we get some head fakes, right? Some fake out breakouts? I'm hoping so, because you're going to see tonight I got some great fake out breakout game plan for us here for Friday. Now, back to our charts tonight. The money is on the charts. The news is great, but we're going to trade the setups on the charts tomorrow. Now, whether you trade one of these markets or you trade all of these, I'm going to cover all my favorite trades on each of these charts tonight. Make sure you watch all the way to the end, because I'm going to cover different trade ideas, different advanced tactics, and I try to wrap it all together towards the end. So I'll give you a reason to stick around all the way to the end. Let's go NASDAQ, S&P, and we'll wrap up on the crude oil here on tonight's video. Now, keep in mind, I'm going to start with the NASDAQ here tonight. The NASDAQ and the Emini S&P are almost interchangeable, and you could apply this to the NASDAQ, the micro NASDAQ, the QQQs. Really, all of this analysis can be used on the NASDAQ or the S&P, because you can see they're very, very similar. A 4,000 tick chart here on the NASDAQ here tonight, and there are two key insights, two basic ideas here, or two key insights that are telling me where the best trades will be for tomorrow. The first one is this overall bull bias. Look at some slower time frames right now. We are medium term in a bullish environment. Buyers did a great job at pretty much gobbling up every single pullback. It wasn't until that deep pullback that we saw, middle to late morning, that finally all the big money, the smart money, came in and pumped this thing back higher. So we're definitely still bullish. There's no reason to think this is a bear market yet. But again, that may change at some point tomorrow after that non-farm payroll number comes out. The second real key insight is kind of the most important part of this chart. It's basically a range with rotation off the low. You can see a trading range right in the middle. Ranges act like magnets, and ranges also like to rotate. So as we go below the range, we rotate above the range, above the range to low, right to the top, right to the bottom, and we rotate back and forth. Oftentimes, the amount we go below is about as much as we go above, right below, above. It can be very symmetrical. So that gives us a real great level of resistance overhead. It also tells us kind of what the buyers are looking to do, right? The buyers are trying to finish that rotation off the low, taking out, right, some of these prior levels of resistance and that pendulum swing overhead. So knowing all of this, we know that buyers would love to buy breakouts going higher. We have wide open space above until we reach up at that 76 3/4. So buyers would love to get some breakouts going higher. Buyers would also love to buy off the low of that trading range, because of course ranges act like magnets. How about sellers? Sellers are drooling over a fake out breakout back down into that trading range. And I also think one of the best trades possible for tomorrow is that fake out breakout. Sellers would also like to trade the reversal, breaking out of that trading range and shorting this thing as we take out those lows, and more importantly, as we make our way back down to that 13,000, which is probably where the bears would like to end up at some point tomorrow. Might not be likely on a summertime Friday, but hey, a non-farm Friday, anything can happen. So there's plenty of ways to make money on the NASDAQ and the S&P. Again, a lot of this will be interchangeable here for us. Now, I'm going to cover let's talk about first, as the market goes higher, I'll cover the bullish scenario on the NASDAQ. On the S&P, I'll cover the bearish scenario. So we'll cover all the bases here across these two markets here tonight. So first of all, as this market goes higher, we have to be very careful, because we have a lot of resistance up overhead with our trading range. Okay, so what would be some breakout patterns that we could use as we go higher? One of my favorite breakout patterns is called a 1-2-3 breakout. It's a very simple pattern. I would like to see us get up into this area, hold a pullback, and then hold the moving average. Simple as that. So we take out the pendulum swing, or in that area, get me up around that 13,400 or so. I want to see a pull back to the moving average. And at this point, the buyers have to show us they really want this breakout. This is major resistance overhead. So the buyers have to show us. They have to jump off that moving average. This is the 21 moving average, by the way, that I'm using here on this tick chart. And so once we get that 1-2 blast and that jump off the moving average, now what I can do is I can mark off a trend line off that high. I can mark a trend line off that low. And I always like to kind of look left and try to find some prior swings and grab one of my entry setups, right? I use 4 different entry setups in our trade room. Traps below prior swings, failures below the moving average, pullbacks as we snap back up, right? Couple there as well. So the most important thing is that 1, 2, 3 breakout. I'm looking to buy the low of that channel with any of those price action entries, the entry pattern setups I talk about in our free trading course. Here's another breakout to consider. Let's say that news comes out tomorrow and it's horrible news, right? So, the Fed has accomplished their mission of tanking the economy and the market loves it and they blast. Now, at this point now, they start to grind higher, right? It's like a melt-up market. When that happens, especially in low-volume Fridays, just simply draw a trend line off that high, bring that trend line and anchor it off one of these major lows, and then go looking left and find some prior swings. In this one, you want that first test off the low of that channel. It could be a trap below a prior swing. My favorite entry is usually right below a prior swing on those. I want to get below that moving average because as the sellers come in and try to short that thing, that's my chance now to buy right into those stop losses. Now, where would my target be for something like this? Well, remember that old saying, the first leg and the third leg. Okay, most trends are going to go 1, 2, and 3. And the first leg of that trend, which would be this one right here, is almost always equal to that third leg. Okay, so right now, obviously, we don't exactly know how big it will be, but if it's a strong pop-up, that leg right there will be used off of that first pullback. And again, we get a pretty good idea of where it wants to go, that's 76 3/4, but that will give us a better kind of idea of where those targets are likely going to be. Now, my favorite trade for tomorrow would be as we go higher here, right? As we go higher. Now, at this point, there'll be a trend line coming up underneath. And so we want to make sure we trade around that trend line. So kind of keep that in mind as we go over this here tonight. As we go higher now, we take out some of these levels of resistance up overhead. We are very bullish at this point. So now we have to give the buyers the benefit of the doubt. The buyers have a chance right now to hold that pullback and blast. But if they try once, if they try twice, again, thinking about kind of where that trend line comes over, we might get a chance to actually use that trend line as the entry signal, right? Actually getting that 1, 2 and using that trend line. If you've been watching these videos a lot this week, you know those trend lines can make for excellent early entries on this. But I want to think about this though. At this point now, the buyers have dug their own grave, right? They're buying into resistance with a major range magnet down below us here. This is what's likely to, if that non-farm payroll number comes out really good tomorrow. We may see that pop up. It may rope in all the kind of inexperienced traders who are just simply taking the news events at face value. Remember, the world is way too complicated right now to look at news events as just a top line number. You have to look at it. It's a little more complex than that, unfortunately. Remember, the bad news is good news. So maybe we do get that really good, strong number tomorrow. The market spikes up, but buyers, right, they walk in like sheep trying to buy into this thing. And of course, all the smart money are trading against them. They think about where their stops are, and we now can sell right into those stops for that run back down. I call these 1 try, 2 try failures off the high. Now remember, at this point, your job isn't over yet. Your job is not over yet. What happens a lot is the market will turn around now and run lower. What I can do is I can draw a trend line off that low. Aha, you got what I'm talking about, right? Channel off that high and then find that swing And this is, I'll tell you, this is one of my favorite trades here, because sometimes we don't get a great reversal signal, but as it rolls over, we get that trap, that failure, that pullback. Again, all the setups that we talk about in that free trading class on our website. Which reminds me, by the way, I know most of you guys and gals have taken the free course. You've learned all the entry tactics. You know when to take them. You know when to skip them. We talk about the basic rules, right, in that free trading course. But listen, if you're one of the few folks who haven't taken advantage of that free class on the website, what I'll do is I'll put a little button up here, a little link for you here in the upper right-hand corner. Grab that link, get registered for our free trading courses here on the website. If you're sick of missing the best trades each day, or you're taking too many losses, making too many mental mistakes, the strategy I teach in that free video course will get you into many more winners, help you avoid losses, and the biggest thing is it'll give you a ton of confidence every day that you're trading. It's perfect for someone trying to transition into full-time trading. That way, after you grab that free course, you'll know kind of what a failure pattern looks like, how to find those channels, and you'll know like the specific rules I use and the entry time frames to use, right, to grab those shorts. And again, don't be surprised if we get that, right, if we get that trend line coming over and we get it right. This will be amazing. One try, two try, and that short off that trend line, that would be something I really like as well. Where do the bears want to go at that point? What's mission accomplished for the bears? Oh, you know what they want. They want to bury that 13,180 low and then potentially break out as we go lower. Which reminds me, what if we do roll over lower, right? Can I buy it off of this low? Can I sell the breakout going lower? Let's talk about that, right? We'll cover that next up on the S&P. And again, remember, everything we're talking about here on the S&P or the Nasdaq can pretty much be interchangeably applied here right now. Over on the S&P, a slightly faster time frame here tonight. Volume was pretty low overall today. It is the first week of the month of August. We'll be dealing with a little bit of the summertime, not blues, but summertime slowdown until we get through about the third week of August once the kids start going back to school. Once the kids go back to school, then markets start to pick back up again. And I always tell my students the summertime is actually the best time to start learning how to trade, because you don't want to start in the fall. You want to give yourself some runway to get ready for it. I also think summertime trading is great for patience and discipline because markets are a little bit slower. So I would not make that rookie mistake and think, I'll get serious about this come after Labor Day, come Halloween, because by that point you already want to have the system running. You want to have the engine running, and that way you're ready to capitalize on what is usually the best time to be a trader, that September, October, November, all the way through next summer. So just my 2 cents on that. Over on my S&P here right now, we're really basically the same idea, right? As we go higher, we're looking for breakouts. We talked about those 2 breakout patterns going higher here. As we go higher, would love to get that bad news is good news for that short back down here on the S&P. So very, very similar here on the E-mini as it is on the Nasdaq. One thing we haven't talked about though yet is what if the market rolls lower? What if we fail? Remember, at this point, we have a rotation off of that low, right? Get that rotation off of that low. So markets really should be coming in and taking out that high here. What if they don't, right? What if the market now rolls over and retests that low? Here are 2 ways. We'll talk about the buy side on it, and we'll talk about the sell side. So how do you buy it as it goes lower here? Well, first of all, if it goes lower right now, that should be seen as a major, major failure for the buyers. And so what I want you to think about on this is, we are overall bullish right now, but that'll be a major failure. So one will be the most aggressive entry is the one to buy it right back up. Okay, that's the one that will probably be the most difficult to time, and we'll talk about that here in a second. The next thing is to think about the basically double bottom, right? That'll be a lot easier, maybe not easier, but it'll be a whole lot more reliable. It'll be more likely to work for us, and we won't have to be so patient on that one. So those are the 2 kind of scenarios, right? We can buy it on the bounce, or we can buy it on the double bottom. Okay, we'll talk about those here in a second, and then of course we'll talk about the breakdown, because as you can see, the S&P S&P has. If there's one market that, again, we're very bullish here right now. I don't want to throw, too much, hot water on the move lower. But look at that juicy range. I mean, there's a nice juicy range down there. Look at that range, just begging to get lit up tomorrow. 4,100. Again, will good news be bad news here? I can just imagine, right? A nice rip for that non-farm payroll tomorrow may send this market pumping up and then dumping right back down again. Okay, first one. As we go back to that low now, I want you to think about a crown reversal. Okay, what's a crown reversal? A crown reversal is a two-try failure with a trap. Okay, two-try failure with a trap. It's a very simple idea. Okay, in this one, we take out that low. Remember, at this point now, if I want to be a buyer on this, remember, this is a big time failure at that point, right? Big time failure, right? Even if we go up and then all the way back down again, okay? This will still be the pattern setup that I'll be looking for here tomorrow morning. So as we go low, we take out that low. Now, at this point, we're going to rope in some of those sellers, right? The smart money sellers are selling here, they're selling high. So if anybody who's selling down here, these are the weekends, right? This is the brand new rookie that came into the poker game and wants to learn to play, right, with all their chips. So this is where we want to rope those bears in. Let them try once and let them try twice. Now, here's the problem. We don't want to get too aggressive on this by buying into stops. Okay, why? Because the higher you get right now, the more likely you're walking right into some other channels coming down, and there are more bears walking in there. So what you want to do is you want to look for traps on this. And this is why crown reversal is so necessary in this situation. Okay, because it's a major failure, or it went all the way up and then ran all the way down, right? Those are the two scenarios we'd be in at that point. And so at this point, I've got to get those bears trying twice, and I need to anticipate that sellers are going to attack that area. Right? They will, because it'll be seen as a major failure for those buyers off the high. So I have to get in here at the lowest possible price, right? If I try to sell up here, right, what'll happen is it'll oftentimes go up and then go lower and then bounce up. So I really want that trap, okay? And once again, this is just a simple retest of that low, okay? I want that trap, two tries for the bears and getting into the trap low on this, okay? What I'll do is draw a trend line off that high, bring it down off that low, and look to add to that, right? That's kind of a little hidden secret we use, right, in our trade room, where we can draw off the highs, find off those lows. We can look for, right, those bounces off those hidden channels, all right? So watch that one. The next one here would be, let's say we take out that low. Let's say now that bears come in, right? They come in and sell short, and they double bottom it now. Okay, so now we've double bottomed, and now we have to understand now the bears have already committed now. You know what I mean? The bears are already in. They're taking their profit down here. Now the only thing we got to worry about now is more bears waiting above that high. So now what we do is we come back. Let me get rid of that here real quick. Right, we retest that low, and now we can get a lot more aggressive on this. Now I can let the bears try once, let the bears try twice, and now as long as my entry is ahead of that high right there, I should be fine. Okay, I want to make sure I rope in those bears. Obviously, if I get that trap, even better. Okay, trap will be even better, because then you're buying as low as you can. But again, once I get those bears now trying twice, think about where all their stops are going to be, and I can buy right into those stop losses. Again, same idea as before now, is as we hit those stops, if I can get a nice strong jump running higher, where does the market want to go now? It wants to rotate back up to some of these highs on the other side. Remember, ranges love to rotate back and forth, so we're not going to chase after it as it goes higher. Remember, we always buy at support. We always buy low. So now we'll go over, find a new trend line off that off that high, off that low, and we're looking to buy it now off that, right off that trend line. And again, a lot of times the best entries are going to come just below a prior swing. So as it's going higher, I'm kind of marking those swings in the trade room tomorrow, and I'm looking for those traps, those failures, those pullback combos, right, off of that channel low. This would be another great setup for tomorrow, right? A 2-try failure into that, as we always say in our trade room, into that first test of that new channel. Could be a trap, could be a failure setup into a pullback combination. That's how you want to buy it as it's going off of that low. And as always, stay out of the middle, right? If at all possible, stay out of the middle. The middle is always where good trades go to die. Now, how do we trade the breakout? There are so many ways we can trade this breakout because, again, if we fail to retest that high right now, good news is bad news, and the market really sprints. One of my favorite trades right now is that pop and grind, right? That pop and grind. These are very common in summertime markets. We can mark a trend line off that low, bring it up around that high, right? And then go looking for prior swings on this. And you want to get, ideally, above one of those swings, get above the 21 EMA, which is why I love to draw channels backwards like this, because what it does is it creates this channel that's a little bit wider than people think it is. And so when it gets above that moving average, buyers will come in and try to buy it. At this point, though, it's a strong move down. Anytime we see a strong move in one direction, what do we expect? Another leg in the same direction. Let's get those buyers now trapped in above the moving average, and we can sell into those stops. We can sell that first pullback off the 21. And remember, that first leg and that third leg are going to be targets. Now, tomorrow is a Friday, and if we get some bad news, it's good news tomorrow, which will really be, it sounds bad, but it'd be great, because that will probably be some of the easiest trades we've seen all week. Remember, leave a runner, because Fridays love to just drift. They love to melt up or melt down on low volume, especially after a non-farm payroll number. So we got that big range waiting down below, that 41.20, 41.15, 23 high, 13 low. If things really get out of control tomorrow, 4100 is a pretty easy one as we go. Also, too, we take out that low. The sellers come in, right? The bears come in, and now they just punch it, right? Didn't do it here, so they got to hold it, right? Remember, it doesn't matter how strong that first leg is, okay? That leg can be very strong, right? But what we want to do is we want to pull back and see them actually hold that, right? And once they hold that and blast lower, now that is a 1, 2, 3 breakout pattern, and I can now mark off that trend line, I can mark off that channel, and you guys get the point, right? Grab those traps, grab those failures, grab those pullback combos. First leg, third leg, we go from there. I would also imagine if things really, really get crazy for the downside, okay, this would not be applicable to the upside, but to the downside, though, if we were to see, let's say, just a rocket ship going lower here, right? Real strong move, right? Strong move, shallow pullback, lower low in price. These are gimmies. That trap will be sold pretty much every single time, okay? Repeat after me. Strong move, shallow pullback, lower low in price, traps, baby. That is a great setup. We call these 2-try traps, or in this case, a 2-try breakout scenario. So keep that on your radar as we go lower. So as you can see, there's no shortage of ways to make money on the S&P and the Nasdaq. What do you think, though? Did I miss something? Right? Did I miss a good opportunity here? Let me know in the comment section. I would love to know what you think. Do you agree? Do you disagree? Did I miss anything here for tomorrow? What do you think about the bad news is good news? I would love to hear your opinion in the comment section below. How about some oil? Boy, oil is looking great. We're all kind of biased, aren't we? Unless you drive one of those Teslas or unless you drive an electric, like a lot of folks do here. I live in Los Angeles, and it seems like everybody has an electric car here in LA. But I think we're all kind of cheering this price down right now. Everyone wants gas prices and shipping prices and everything prices right now have been really high because of this oil. We heard from OPEC, yesterday morning we heard from OPEC about increasing production here. So it is definitely nice to see oil back sub 90s here. Hopefully we can get this thing back around $75 a barrel. That's kind of where this world has the price of oil priced at. There are three main components. Let's stay on track here, Joe, tonight. There are three basic components. One is the bear bias. Look at a 4-hour chart. Look at a daily chart. You'll see we're rotating off a big range, and we're pretty bearish here right now. We're pretty bearish until we get down to 85. We got 84.95, 84.13. Look at a weekly chart, look at a daily chart, and you'll see these are kind of the rock bottom lows of this big wide range, this kind of big expensive range everyone's been going through the last few months. You got to think 85. 85 is probably where these bears would like to be right now. So we definitely have a bear bias. Now, for a bear bias though, 88 right here, 88-ish. In all reality, 87.64 is a major area of support. If you look left, you can barely see it, right? That's a major bottom, as you can see, back from mid-July. And so basically, oil made that big run lower. We popped up, and now we're basically back to retesting that low. Is basically where we are right now, right? And like we always say, whenever we have a strong move in one direction, we expect sellers to come in and sell the bounce and retest that low. And then from there, what do we always say? We expect to see either, right, because we're basically right here, right now, in the bigger picture on oil, we expect to see either a bounce off of that low, or we expect to see a break through that low, right? And then try to use that low as an area of resistance on that next pullback. So really right now, again, we're kind of sitting right here. So do we bounce off that low for maybe a double top short back down again, right? Or do we break out through that low and then look to hit it on the opposite side? That's basically where we are right now. All right. And then another big question, another big factor in this one is a strong move. That was a very strong move down here this morning. And we always say strong moves love to retest, right? They pull up, they trap high, and of course they short it back down to retest the low. So it looks like right now the bears are just about to complete their objective by retesting that low. So bears have control, plenty of selling opportunities. We can sell at the obviously resistance overhead. Traders would love to use some of these levels. In all reality, guys, this whole area will be seen as resistance. That whole area from 90.43, basically from this area to that area, this whole area is resistance, right? We can sell here. We can sell here. Now, we will need to use different techniques because the deeper the pullback, it determines its momentum, right, plays a big role on that. So sellers can definitely look to short that right now. Buyers can definitely get long on this, but again, fundamentally and technically right now, this market is pretty bearish. So it's a little bit difficult to justify a buy side right now. It's tough to fight the sentiment in the market. Technicals are great, but sometimes you just got to go with the flow. You got to go with the sentiment in the market right now. Bears would also love a breakout going lower here, right? So breakouts going lower, got a couple breakout patterns we'll look for here as well. So how do you make the money on this? Where's the best way to make money on this? I think a lot of this has to do with what happens here in the next few minutes here as we open up in Asia. For example, we know the sellers, they want to retest that low, right? So they're not there yet. So let's say, for example, they don't retest that low and the market goes higher. Okay, I still want to be a seller because we're still pretty bearish, and I still have all kinds of resistance to use. But the challenge now will be there'll be a trend line coming up overhead. Okay, so let's kind of think about that. If it just bounces ahead of that low, or what the best possible scenario would be if it goes a little bit lower, right? The ideal scenario here is, and we just talked about this, right? Strong move, shallow pullback, lower low. What do we always say? Traps, baby. So that would be probably the easiest trade if it does take out that low and make a little bit lower low there. All right, so here's one scenario. One scenario is we don't actually retest that low. We jump up off of that low now into an area of resistance. It would be expected to get a big bounce here because, again, this 87.64 is a major, major low that we assume bears will be taking profit on. The problem we have, though, is now that trend line comes up. When that trend line comes into play, now you have to think in terms of traps. Traps are the best way to avoid selling too low, in this case, into that trend line. So the buyers will try once, the buyers will try twice. We need that second try to get that trap. That trap is where the best trade will be short if we don't retest or go through that low a little bit. Make sense? The only other option is to wait until we get underneath that trend line to sell it. But now your risk-reward ratio is horrible, right? My risk is too big. My reward is too small. This is the one we want as we pop higher here. Now, keep in mind, if we don't retest that low, and we bounce really hard, which oil has been doing that a lot lately, some real sharp bounces here, it's still pretty simple, right? At this point now, it's actually a better thing because now we have more space to work with. That strong bounce off the low, though, will give buyers a little bit of an opportunity to grab control of this. So this is where you use their stops as fuel. You let them try once, you let them try twice. I like to always go out, draw a trend line off that low, bring it up around that high. All their stops now are sitting right below that low. Get that nice short signal, which you're going to learn. I probably have hundreds of examples of these types of failures in that free trading course that I mentioned earlier, and that will be that short back down again. Okay, does that make sense, right? So the deeper this thing pulls back, the more desirable it is for the bears, but it's also, you always pay a price for that. Remember, there's a negative correlation. You're always going to have that challenge of the bigger the potential reward, the more momentum is a challenge. That's just the way trading goes. So the deeper the pullback, the bigger the profit, the bigger the reward will be, but you always have to deal with that momentum. There's always a trade-off between risk reward and the momentum that you're trading either with or against. So keep that on your radar if we get that strong bounce off of that low. All right. And then also, too, think about it, too. If we were to bounce off this low, take out some of these levels of resistance, and then buyers come in and just rip this thing off that trend line, what is that? That is a 1, 2, 3 reversal. Remember, the buyers have to really push off that moving average. Okay. It won't be enough to go like this. Okay, that will not be enough. All that does is just simply give us some more time for a 1, 2, and back down again. But if they really do jump, if they really do blast off that moving average, now where do we think we're going to go? Probably back taking some of these highs up here, 92 area, 91.90, range as a magnet. We can mark up that high, right? Find that new channel low, and then go drilling down and grab that first test off the low. Right? Does that make sense? We can't buy that first pullback, though. Okay, promise me you're not going to walk into that. Let the thing fool you. Okay, talk about head fakes, right? That will be a head fake you want to avoid. Okay, and again, if they try and they fail, we're selling it back down again. Okay, so keep your eyes on that as we go. And then, boy, I'll tell you, again, if we go lower, that's kind of the easy part, right? We pop through and we start to grind, right? We pop through, we grind, we draw that channel off that low, off that high, and we set up for the short, right? Off those traps. Okay, right here. That's all this was, right? All it is here. Pop down, grinding down. You draw that channel off that high. I mean, this is as easy as this is the easiest example you can find, right? They happen all the time, right? Right here. Pop and grind, channel, high, short that sucker. Right? It's the same thing over and over again. It's remarkably simple. We don't need to overcomplicate this. So another one would be we take out that low. We pull back. We blast off the moving average. Okay? Easy too. Find that low. Find that high. You got it. Short that first test. We know that 85, right? 85 down there is where these bears want to go next. We also know first leg, third leg. Right? First leg, third leg. Okay, so watch that as we go. Let's say we take out that low, right? Take out that low. We then pop back up now. Even easier, right? Even easier. Moving average comes over. Buyers walk right into an area of resistance. Now there's no trend line now, right? Now there's no trend line to worry about. Now the buyers walk right into a trap, and we can short right into their stops. We got plenty of space now for that pullback. Again, that would probably be the best scenario. That would be the easiest short, right? That head fake lower and that trapping in the buyers and then hitting them again off that pullback, right? These failure into pullback combos are very, very common, right? Target back at that low, and a Friday, leave a runner, right? Leave a runner. Strong move down, really strong. Shallow pullback, lower low in price. Traps, baby. That one works as well. All right? We may get them to use this one. You know, they may pull back and blast here, something like that, and we're drawing off of those and that. It'll be whatever it'll be whatever fits best, right? Once we get there. All right? But again, if it keeps on, right, keeps on pushing, let's say it does roll lower and it really pops back up now, real strong, right? What do? Do we buy it? No, we don't buy it until what? Until they hold that pullback and jump, okay? Then we can buy it. What do? We wait for, remember, the deeper the pullback, the juicier the reward's going to be, but the worse the momentum will be to sell into. 1 try, 2 try. Let those buyers dig their own grave and short that thing right back into those stops. Now, that would be a really good trade for tomorrow, right? That would be a really good trade for tomorrow, right? They run lower. We look for the short off the top, but we don't get it. The market really pops back up, right? Again, we look for the buyers to come in, let them dig their own grave. We don't try to sell into it, right? I'm not trying to predict how far that thing will go. That's a rookie mistake, okay? Don't try to predict. Let the buyers show us their cards. Once the buyers show us what they're doing, we can then trade the reaction from there. It's just a lot easier. You know, yeah, sometimes you'll miss a good trade, but your winning percentages will be so much higher. Again, you know, like I mentioned before, when you go through that free class I mentioned earlier, you'll learn this stuff and you'll get a lot more confidence in your trading. All right, guys? So tomorrow, Non-Farm Friday. Is it going to be one of those good news is bad news types of days tomorrow? I'm getting excited just thinking about it. And don't forget, we open up every morning, 8 o'clock Eastern time. If you're looking for a great place to learn and trade along, you're going to love my trade room. I'll put all the free course links, all the membership links in the description of the YouTube video. Please don't be afraid to call the office, right? I know I go over things pretty quickly here on these videos, but we'll slow it down. Make sure you have all the right tools you need to get registered and get ready for our trade room every morning as a new student. The fastest way to get more information is to call the office or send me an email. Use live chat on our website, or as always, you can drop questions in the comment section below. Guys, that will do it for me now. That's it for tonight. That's it for the week. We'll come back tomorrow in the trade room. Hopefully I'll see you there trading right along with us. If not, we're going to come back next week, and we'll do it again next week for the second week of the month. Looking forward to next week, because next week we have Reaction Monday after that Non-Farm Payroll Friday. I'm excited. Tomorrow, though, we'll see you guys tomorrow. If not, same time, same place, back here next week on Monday evening. Have a great summertime weekend. If I don't see you guys tomorrow morning in the trade room, and as always, be well, be nice to each other, and be here next time, will ya? Adios, amigos. Bye-bye for now.